All right, so there's a very smart recovery in the broader markets as well as the key indices. Nifty is almost breaking into green. Pull out the bank Nifty and you would see it's almost into the green. Small cap and mid cap indices, which were the most shaken and stirred part of the market last 2-3 days, are gaining very smartly. Almost 1% each small cap and mid cap indices are. Does it mean that the correction was swift and shallow? Abhay Agarwal from Piper Serica is here to talk more about it. Abhay, last 4 days I was away from the channel and the show. I was busy at eating on GBS, and there was a kind of a correction which played out. Did you participate in it? You always have your strategic buy list handy. Did you participate? Is it over? Was it shallow?
Yeah, thank you, Ajay, to you, and good afternoon to all to the viewers and you. So we have a model portfolio, and to that we are always looking for opportunities to add to that. There is some cash allocation. Our cash allocation was about 10% in last week. We have used half of that in this correction because we saw some of the stocks correcting post results. I think what we're seeing is that for some reason the result season is turning out to be very volatile, and I don't know what investors are trying to read into quarterly results. But the sell-offs are quite sharp, the rallies are quite sharp. So we are trying to make use of that volatility as much as we can to improve our long-term returns. But again, there is limited scope to doing that. On the market construct itself, I think there is bound to be volatility in a rising bull market that we have had not only in India but even in US. There will be days of sharp corrections, and people will just have to get used to them.
Are you looking at opportunities which lie in the middle of a buyout kind of a war for some media assets which is happening? Because if one were to really just ignore this buyout transaction, there is some inherent value in the business as well. The large part of the market believed that if the earnings start supporting the story, could be many times over. And last evening, referring to Z, the management seemed to have indicated that the aim of from here on is 18-20% margins, frugality, and business growth. If they walk the talk this time, can this business get re-rated going forward?
Yeah, Ajay, that's a great question, and I would like to just put a disclaimer before that this is not a buy recommendation, and we have recently over the last week or so added the stock to our model portfolio with the allocation of about 4%. And the reason, Ajay, we have done that is on the same lines to what you asked, that we wanted to separate out the core business value, the core value of the business itself, with the technical overhang that is there on the stock about the merger failure and then the management issues and other stuff. So we wanted to ignore that noise for the time being and look at only the core business. And if you look at the core business, one of the leading media franchises in the country, profitable, not leveraged, trading at a $2 billion market cap, looks very small. The value looks quite small in terms of what it can be if the technical issues are sorted out. And I think there would be a desire, we are hoping at the management level, promoter level, lenders, other large shareholders, to resolve this matter and make sure that the most important thing, which is the asset itself, the business itself, continues to grow. And I think it is a good timing, getting into an election year where ad expenses are high. These guys have very good properties, even online OTT space. So I think there is always a risk, but I think where the stock is positioned right now, the rewards are more favorable than risk right now.
In fact, what a coincidence that we are having this conversation, and in the middle of this, Sony commentary is actually coming on the flash. Sony executives are commenting that India is a great growth potential region and they will try and seek more opportunities here. So it's not over till it's over. Let's see. But here you were talking only for about Z. Moving on, what are the name which you already hold, Abhay, which you have added in the last 1 week, or you are very keen to add if there are sharp corrections on the way in those names?
Sure, Ajay, again, not a buy recommendation, but we have discussed this earlier, I think, in the last show when we discussed themes, long-term themes. themes, and I had said that we're very bullish on the whole manufacturing space and outsourced manufacturing. And I think two of the leaders in that space, listed space, are DIXON, which we have had in the portfolio since its listing, and we have made very good returns on it. We have always held our model portfolio allocation constant there. But the recent addition has been Amber, and after we bought, actually shot up and then it corrected sharply post results. I think people were expecting too much from the quarterly results, and probably that's why some of the short-term players exited, and we used that opportunity to again add back, increase our allocation to the stock. So I think that is one space that we're very bullish on. The second space is large cap pharma companies like DIVIS, DR REDDYS. I think these are very long-term plays that will be multi-baggers from here on. Market is ignoring them. So these are the two spaces, Ajay, that we have been adding in this time.
Right. I'd like to scratch that point of pharma a little more because, even Aurobindo Pharma today, the details of 483 have come in and the stock is taking it on the chin. But bulk of the loss or the cut actually happened last week. I want to talk to you about, beyond this 483 or one plant getting into trouble, even if you adjust for that plant. If you look at Aurobindo's EBITDA this time around, 1600 odd was strong on a QOQ basis. Last time was 1250 odd. And many others, some of these big ones. The profitability improvement is a whole lot. You're playing them for next 2-3 years. Are we in early cycle still? Because they have run up 20-25% from the recent lows.
No, I think they've run up to to a point where they were oversold, and then I think investors who are looking at long-term value creators at a very reasonable valuation, they got in, and the run-up has been because of that. But I think there is plenty of juice going forward, Ajay, and I think some of the key reasons for that is one, the biggest reason is there is a pricing respite in the US market. Secondly, the US FDA has been friendlier compared to earlier, and I think the Indian companies have also learned a lot from the earlier US FDA inspections, and they have improved their manufacturing capabilities and quality standards to stay on the right side of US FDA. And the third thing, Ajay, that is happening, the most important thing is that almost all the companies have a very strong product pipeline going into 2024, both in the US and in India. And, like companies like DR REDDYS has a pipeline of more than 125 new launches. And all this hard work that has been done over the last 2-3 years by these large pharma companies is not visible yet. The result is not visible yet. The analysts are also not willing to make a bet or call for success till they see it. So I think I'm pretty hopeful that these pharma companies will continue to surprise on the positive side over next 2 or 3 quarters, which will lead to a valuation multiple re-rating also along with earnings growth. And I think that is where the investors will see pretty solid returns from this space.
Have you started work on any oil and gas company for that matter? A lot is being spoken about, especially the upstream side of the oil and gas companies and how low valuation they are trading at. Anything which catches your attention there? Are you working on energy?
I think energy is a very big space that will give a lot of opportunities. So we are constantly looking for plays in energy space. One of our recent additions was Amara Raja a couple of months back. In the large oil and solar space, we haven't yet made a bet because while our experience is that while the PSU companies there that are the leaders are very competent players, but still there is that political overhang about capital allocation and removal of profits from the companies' portals. So that is the issue that we are constantly worried about. So that is why we have stayed away from the large OMCs, but we are always looking for ways to play energy space because I think energy security is going to be a very big theme over the next 5 years.
Right. All right, Abhay, we'll let you go on that one. Thanks very much for joining us this afternoon. That was Abhay Agarwal of Piper Serica. We'll also get in a view from Ashwini Agarwal on his approach to the markets right now.